Hello, this is Rich from Tradesight. Here's the market preview for the coming session. This is for Wednesday, April 9th, 2014. Well, we wound up with a classic measuring day today where the averages try to do a little bit and bounce back, especially when you focus your attention on the ES and the broad market side. NASDAQ side was a little bit better after being a little bit more oversold than the rest of the broad market. But all in all, not a great day. Certainly better for the bulls than we've had the last couple sessions, and potentially something to build on. But for now, just really a pause day. As we talked about in the previous preview, we're looking for more of a measuring day, kind of back and forth action after getting range expansion to the downside. The advanced declines were pretty decent on the New York side, plus 1,100 issues. We're plus 900 on NASDAQ. But all in all, not a great day. This probably smacks of more of a kind of a running correction for the market than anything else, where we're going to see some profits taken out of one particular sector, then they move on to the next, and then then of course that cash has to go somewhere, at least part of it. And so I think we're probably in the midst of kind of a rotational correction right now, if you will. But let's move on and take a look at the averages and see where the major futures charts, see what they have to say. All right, here's a look at the ES futures. I don't want to go into too much detail about the signals and where we are. I just want to really talk about the recent price action. Again, we used the 50 DMA, found support there. We opened actually a little bit above it, went down a little bit below it today to test it. But the fact of the matter is we closed below the bottom half of the previous day's trading range, so in no way is this a reversal yet. The bulls are going to have to come in and do some more work to reverse this back to the upside, and certainly by our definition here at Tradesight, we're short-term negative until we get back above this 10 EMA at the very least. So for now, key support remains at the 50 DMA. If that breaks loose, we've got a little bit of support at the 5/8 level, where we line up with the previous lows of this trading range, and then much more important support at the 4/8 level here at 1812.50. To the top side, the 10 EMA is going to be resistance, and that's right in the area of the high from Monday, so that's definitely going to be an area of interest. And then above that, 1875 is the big level. Moving on to the NQ futures, NASDAQ is much further off the high than the ES, so therefore there's been much more selling and much less bidding. So got a little bit of a better bounce here. This static trend line is still active, it's still in play. That's the low here from candle 1 on our secret startup phase. So that's still supporting the market for now. We filled this gap, so we can cross that off the list. That's already been done. So if we do continue back to the upside, the area of interest is going to be this 10 EMA at 35.75, and then the 4/8 level at 35.93. To the downside, the big one is if we take out the low from Monday, we're going to reactivate this to the downside. The difference here in the NASDAQ versus the NQs is you can see the NASDAQ side here is well below the 50 DMA, whereas the broad market side, or the ES, is still holding above it. So right now we're short-term and intermediate-term negative on the NASDAQ side of the market. Dow Jones was plus 2 points on the day. They had to come down and dunk down to the 50 DMA. That's the red line here to find support. If we do bounce back to the upside here, keep in mind that on any kind of a retest of this high, we're going to wind up getting our 13 exhaustion off the seeker. So even if they do kind of circle the wagons here and start to move it back up, at least for the near term here, there's not too much to get excited about. Here's a look at the multi-sector daily chart. This one really speaks loudly to the rotation going on right now. Still seeing a little bit of a bounce here in the XAU. That's kind of a source of funds. I think people are getting a little bit more defensive right now. You can see the money still coming out of the BTK. The BTK, the red line here, was lower on the day. The semiconductors, that's the blue line here, was positive. So you can see the NASDAQ rotation here, still taking some money out of the BTK, a little bit flowing into the semiconductors, and probably a little bit also some portion of that flowing into the XAU as well. On the broad market side, the big one was the BKX, the green line here. Didn't really bounce today. We do have a qualified lower high in place here. Here's your high Here's the drop off the high. Here's your lower high, and it gets qualified once this low here gets taken out, which it clearly has. So we've got a lower high in place now on the BKX. So really need to see some of these late cycle stocks kick into play. Need to see the oils and the transports really start to assert themselves here to hold up the broad market if that's going to be the case. Here's a look at the stocks versus the NDX. This is the ratio chart. When the chart's on the rise, the semiconductors are outperforming the overall NDX, and you can see the excellent performance of the semiconductors relative to the NDX, even though the NDX has been fairly weak. So clearly there's been a rotation out of the BTKs into the semiconductors. Need to see this continue. If this starts to falter and we start to see more weakness coming into the semiconductors, and if the BTK remains weak, that's probably going to be the last nail in the coffin for the NDX for this bull run. Here's a look at the individual sectors ranked from best to worst. The defensive-minded XAU was the top gun. The utilities were pretty high up on the list. That's also interest rate sensitive and defensive in nature. The oil services were very strong. The OSX, that's good. While the banks are still dragging their heels, the semiconductors here were also relatively strong versus the broad market. The BKX, not so great. Would have liked to see the Dow Jones transports a little bit higher up on the list here, but with the oil services being so strong today, if we can get a bump out of the transports, that would be okay. If we do start heading up tomorrow, definitely keep an eye on the transport names, the rails, all of them, because that could be definitely a sector play tomorrow. So keep an eye on that. BTK index was last laggard here, and is still feeling the brunt of the liquidation here in the rotation. Just a couple more charts here before we go. Here's the YG, the mini gold futures. Gold futures were stronger on the day. Still above the 200 here, at least for now, and trying to climb back above the 50. If we do get some distance here, again, this would be kind of like a press. Here's your A wave. This could be the B wave back to the upside here. Keep in mind that we do have our 13 exhaustion here. We did do 9 bars up, but we never got that exhaustion lined up for a full-on reversal to the downside. So we could be putting this static trend line or the 8/8 level at 1375 in play. But certainly, as far as the commodities go, the oil futures were the big star today. They were up more than $2 today. Big push to the upside. We're only 2 days up now. We're already interacting with the static trend line, and this is a little bit concerning, because if oil prices start to run away with the market just treading water, that's going to throw cold water kind of on the macro guys, and I think that's going to kind of put some bids on the sideline. So keep an eye on the oil futures here. I think usually you want to see the oil futures fairly strong, and the equity futures kind of working along with them, at least in the modern market. And if we start to decouple here, that's definitely going to be a real headwind for the market. Levels overhead to watch are going to be 102.90, which is the static trend line. Then this 103 and an eighth. Love to say that, just because you can't say that much anymore with the fractions. 103 and an eighth at the 6/8 level, and the big one is 106.25 if they can take out the previous high here. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.